Hello viewers and welcome to the channel. My name is Shannon Rifkin and the topic this week will be on Meta, which is the old Facebook. And after dropping over 70% this year, what does the future hold for Meta? So here is a chart back going all the way into the early 2010s, showing obviously some incredibly strong gains in the latter half of the decade. Big fall during at the beginning of COVID, and then of course this more recent fall as some of the recent market updates have disappointed the market. And I don't know if we've got this. Yeah, and I thought I'd show this chart too, showing that actually since its listing, Meta had been outperforming the S&P 500 by some amount. But now, if you'd put your money into Meta when it listed, or the S&P 500, only now would you actually be ahead on the S&P 500, which shows what a disappointment Meta really has been in the context of, you know, interest rates that hit zero, tech stocks, and a Nasdaq that has performed exceptionally well over that period of time. But Meta has really disappointed. And I guess what are the drivers of that? Look, clearly, in my view, you need to understand what drove their success before understanding what's going wrong. The original business, obviously the Facebook business, the early question marks, of course, when it was, seeing huge amounts of users sign up, was how are they going to monetize this, especially with so many people getting their social media on mobile. And I think they did an amazing job in those early days. And I think it's not a criticism to say that some of the best companies out there, you need a lot of luck to get kind of over the hump and become success stories. And I think that's what Facebook was. I don't think anyone, possibly in its early days, knew how successful it was going to be. Subsequently, the next leg up in their success was buying into companies, or buying companies that were already on the way up and clearly already success stories, but buying them early enough in their story that they were able to capitalize on the still significant growth. And in those companies, I mean Instagram and WhatsApp, which have been huge success stories, but again, not a new concept from Mark Zuckerberg, but rather just letting the momentum that they were already enjoying flourish under Meta's ownership. I should have said Facebook's ownership back then. But really, to date, the only real success story you say that the company's had in creating its own product is the Facebook product itself. Anyway, the last couple of years, what we've seen, and undoubtedly this has been partly, I think, a knee-jerk reaction to the fact that Facebook is seeing slowing user engagement. We're seeing competition, of course, especially from TikTok, and short form videos are proving a real threat to Facebook's user engagement, which is going to flow through to softening advertising revenues and a smaller share of the overall advertising pie, which for the most part, we're seeing like Google, for example, still holding up its market share and at the expense of companies like Meta. And I think now what you're seeing is the big problem when you have a founder and CEO with too much power. Because Mark Zuckerberg, as much a genius as he is, and I don't think it's appropriate to say that he should have carte blanche in deciding exactly where a company that's already a huge company with significant cash flows, where the direction of it should go, without really any second guessing whatsoever. And I don't think I'm going to go out there to say that he is not the most socially comfortable person you've ever seen. Yet with his big bet on the metaverse, he's suggesting that he knows by betting the company's fortunes and spending a huge amount of money and losing a huge amount of money on it so far. He is saying that he believes he knows what consumers are going to want to do with their spare time, and he thinks they're going to want to spend it in a virtual universe, which is, I'm not saying he's right or wrong. I personally don't think he's right, but to bet the entire company on that vision, I think is a huge call. And again, a CEO that didn't have, the stake that he did, just I think considering the early missteps would already probably be gone, and wouldn't be given the long leash that currently Mark Zuckerberg has. And my concern, of course, is that in the meantime, will they have the capital to, to maybe refocus Facebook on getting it back to its glory days, making sure Instagram and WhatsApp don't become irrelevant. Meanwhile, I think this metaverse bet is going to continue to be a massive distraction, and only this week, of course, we're now starting to see them cut costs cut costs significantly, get rid of a lot of the headcount, which sure might help the short-term cash flow statements, but not going to obviously feed through to the growth that the company needs if it's going to get back to its glory days. So I should say as well, what I've got here is the valuation effectively, which is, I think this is the enterprise value to sales multiple. Back in the early days of its life, we saw enterprise value to sales of over 60 times, and now we're well below 10 times, which I think really says everything. It's not just that the company's performing worse, the market's placing a lower valuation on it as well. And I think given the missteps it's made, that's appropriate. And as bullish as I am at parts of the US tech sector, I think Meta's one I would stay away from. Anyway, that's it for this week's video. If you like the video, please click like and subscribe, and I'll be back with you next week for a new video.